Welcome to TradeTheNBI.com. This is John's report is for the 13th of March, and well, what a shock. We talked about moving up to the 23%, but that likely wasn't going to have enough once we were still underneath this NBI reading here of magenta below the 10 level, and sure enough, that's what happened. And you can see even the short interest, it's really pretty tiny from this standpoint, but we're still between that cyan and red DOC here with the orange, and as long as that's there, you're in continuation. However, we have dipped now, and we were expecting that with this dip below the 7.5, you would see that little pop, but didn't have enough to sustain itself, and wasn't enough either to dip. But we're seeing a turnaround here for midterm buyers and that, and so we're finally in that in between stage. If orange pops up here, it's another nightmare scenario. What needs to happen is you have to actually have to steal here, move above 13.5 to continue any push rally. Otherwise, that's going to fade back, and that will be another new low setup going into there. So keep that one in mind. And what we were seeing is that inflation actually improved quite a bit because of what we were talking about before. The oil had come down. It wasn't great, but it wasn't anything that was spiking, and that was exactly what we were talking about. As soon as energy prices come down, once you throw in some of these added tariffs and things like that, well, you're going to have a more interesting dynamic. From an NQ standpoint, NBI white popping up a little bit right here, but it's also slightly stronger than the S&P because it's close to having that magenta move over above the 10 level. But early on right now in the European session, it's pretty negative right now. Not quite the same depth of orange on the DOC depth as far as getting below either green or red in this particular case. But you still see that extreme continuing to move. So we don't have the distribution. So you're in that accumulation phase right now where they're buying the dip, so to speak. And if it's able to hold at that particular stage, then of course you have your setup for the pump coming forward. But we'll see it here too, because treasuries money will start flowing out, yield will start to increase, and then we will have that differential. That means that money is flowing back into the market. But there was the oil situation, and so this slow decline here has been enough to keep inflation from being a ramp-up effect, and that literally has generated the opportunity for a little bit of a softening from the inflation. Now, if it needs to really move much lower than this, but again, this was that time lag that is taking place in between there. Euro's still in its dream situation, though. This was just a lot of short cover setup on there, but the European situation isn't going to improve. But the readings were clear on it from the buy standpoint. It's just been over exaggerated, and it will have to even back in there. But the belief is that the tariffs are going to be more negative to the U.S. than not, which I don't see how that's going to end up playing out. But this is where current economic theory is, and they really have any idea what they're talking about after a decade of just the Fed throwing money at everything. And they're just hoping that the courts continue to block the ability of the administration to cut government spending. And if they're able to do that, then you'll have that forced continued spending. And of course, we have the budget situation that's developing, and of course, the Democrats are going to block it in the Senate. So we'll see how that one plays out. From a gold standpoint, though, that is an encouragement, and no surprise, we had a little softness there, but now it's moving right back up. And again, I'm still expecting it to break the 3K level. From a crypto standpoint, a little bit of a stabilization there. We'll see if the market's able to hold up, whether or not it will stay that way. But it's not great. I mean, you got magenta over yellow again, but you're in this declining mode. So what you get is the spurts where you get some selling, some buying back, and it's a real tough one to get past resistance areas. That's kind of what we see with that. That's that dynamic element of it. And you can see how much worse ETH is from a reading standpoint, and also caught between DOC, cyan, and red. Not going anywhere. It's just the state of things. When we look at it from the 50K standpoint, so we have the early morning pump, then the puts came through, and in order to convert those, they bought them right back up. NBI white spike though, so the expectation is moved towards the zero, and that's still what the expectation would be, given what these readings are. We're at the 65 now. If we don't make the zero and get somewhere in between there, and then I would look for a strong buyback within that setup. You do have rising gold, so that's potentially there enough to hold it up, but still, as long as an NBI white leads, particularly if it moves over the 25, then I would expect a full retrace to the 0%. We'll keep an eye on it. And this is what it looked like intraday. We had the big dip and then all buying, and that's just that beautiful mean reversion. You know, you get too many people go in one direction, they got to force it back the other way. That takes care of the option players, pretty much wiped out all the gamma and everything from there. But you can see in the European session, ugly on ugly and just getting uglier. So no shock with any of that. As always, though, anything relevant I'll put on the Skype chat, but everything's moving pretty much as expected here, and the volatility continues to be top notch. So can't complain about that. We love these types of movements because that is the time to really clean up for when we get into the little stagnation periods when it's kind of flat. As always, though, trade well. Have a good one. Anything relevant, I will get it on the Skype chat for you. So have great opportunity to trade power towards we get to the weekend.